I don't buy into that. My base case really is for a Fed that does nothing, and it has less to do with trade, and it has more to do with the situation in which the Fed finds itself. Inflation has not been gangbusters, certainly, but at the same time, we're only 2.5% off the zero bound. And I think the Fed is going to be careful before it moves aggressively to do either a cut or a hike, and it's going to remain reactive rather than preemptive. And it is a bit odd to me that the Fed funds futures market is implying such a high probability of a cut, which I think equity markets also think is going to happen. But it doesn't seem like it's going to be in the cards this year because the Fed really does want to normalize policy, in my view.
Barry Zekelman, I want to go back to you and this news around steel tariffs and those being lifted in Canada and the imports coming into the U.S. We've had Dan D'Amico, former Nucor CEO, on in the past, and one of the cases he's made is that part of the reason those tariffs were in place on countries, allies like Canada, was this idea of backdoor dumping by way of China. How does the U.S. prevent that from happening here? And what does a deal like this in general mean in terms of steel supply and steel prices globally now?
So, it's not just a function of China. There's other countries that use other countries as a backdoor, and it is a problem. My understanding under this deal is there's going to be made and melt provisions. In other words, the steel has to be melted and made in Canada and then into a part and shipped over. So that whole chain has to be there for it to be exempt from those duties. I would hope that if the steel was made in China, brought into Canada, and then made into a part and shipped over, that they'd be a dutiable part. They'd be after that. So the real trick in this also is for Canada to stop the dumping of that steel into Canada. That then just ruins the Canadian market and hurts the Canadian steel mills in their home market. So it's going to be a little bit tricky. You're going to have to follow country of origin. But we've been after that type of mechanism for a long time, and at least that type of a standard for steel trade to be upheld to. I think globally it's good for steel prices. I think it's great for trade between Canada and the U.S. And certainly in Mexico and the U.S. I think there was a lot of friction going on there, particularly with how integrated our economies are. But hopefully we can act almost as a trading bloc, being a USMCA trading bloc against unfairly traded imports.
Barry, gauge for me the strength of your business today and, if possible, your take on the broader U.S. steel industry today compared to 2 years ago, before this whole process began.
Yeah, I mean, literally under the Trump administration, I mean, just, when President Trump got elected, the economy took off. So, our business has been on an upswing since then. Even after the tariffs were put in, it's a big positive impact. We've hired in every factory. We've increased production in every factory. We've had record profit levels. We've paid record bonuses to our employees. Just recently, we announced a $150 million expansion, the largest tube mill in the world actually going in to make products that have never been made here before. And that's on the heels of $13 billion of investments announced by the domestic steel industry. So our company had confidence we'd have access of the right type of steel and steel to feed this type of investment. So it's been a dramatic increase, a dramatic change, and certainly the steel industry as a whole has done very, very well. And it hasn't hurt any of the manufacturers we sell to. Everybody we talk to, and remember, I'm a consumer of steel, so everybody we sell to is busy and growing. So we're really, really positive on what we see.